Hello and welcome to new weekly market review for the week starting from 20th July until 24th of July. As a start, we are going to look at the weekly market calendar. And this is the economic calendar. This is the red folder that we will be having for this week, starting from the Canadian dollar with CPI. As you saw last week, we had the CPI report for the US dollar. This time is for CPI for the Canadian dollar, followed by New Zealand dollar, and then the British pound. So on Wednesday, we will have the CPI for British pound, and then we will have also for unemployment rate and employment change for the Aussie dollar, followed by the red folder news for the euros. That's as a start with the Canadian dollar from Monday afternoon for me, which is the morning time for New York session, and then Tuesday, Wednesday, and Thursday. So it's going to be busy week. Some traders, they are saying that because of summer months, all the banks are going on holiday. It is not the case. What is happening actually, the market volume could be thinner, but the banks will be there. So don't get trapped by market educator who was telling you that the market will be quiet and there will be no opportunities. There will be opportunity, but you have to be very careful and very selective when trading. So now let's go to the DXY. This is the DXY chart. And in DXY, what I see that last week, the market took the high of this candle, the weekly candle, and dropped inside, and also took the low and drop inside the range. So it is becoming inside the range. So they were liquidity grab on the top and on the bottom of that candle. So it was a doji candle. This candle also showing as a bearish candle, but because it came to this fair value gap of the weekly, it grabbed the liquidity below these candles and pushed inside the range. So irrespective with the direction, we need to look at the market structure and narrative to see how the market will be performing. Let's go to the daily to have a look, and then to 4-hourly chart. So in 4-hourly chart, it start higher, grab the liquidity on top here, grab all this liquidity, and then push lower. Do I think that the dollar will continue moving lower? I don't think so. Thinking this is the majority of what I'm thinking, that it might go lower, grab one more liquidity from here, from the previous week low, and then it will push higher because the target is the May 2025 high. So let's see. They were good opportunity. This was a good opportunity on the dollar, and you can use this logic to trade other currency like the British pound, the Aussie dollar, the euro dollar. So the British pound is about 35% of the DXY. The euro dollar is about 65% of the DXY. So if you saw this bearish engulfing on this candle, you could have sell from here, put your stop above the high, and then take all this. Either you can close here below this low, and then take another trade, or if you are swing trader, you can continue moving lower. So let's look at the Canadian dollar. Also the news on Monday, you can prepare for that trade. On weekly chart on the CAD, as you see here, the price took the liquidity and then push lower. So this candle, it took the liquidity from the low and then continue pushing lower. This is a fair value gap. Is this going to be inverted fair value gap? We don't know. We need to have a clear structure, and we need to know where is the next liquidity that we can target. adjusting the line like this. And let's see last week what happened. To be honest, I did not trade the Canadian dollar. I was trading gold. As I told you in the last few weeks, I was focusing mainly on gold because I found good opportunity. But irrespective with the currency or any pair that you are trading, there are always opportunity. Don't think that because it is a summer holiday, the market will be quiet. So Monday, as I showed you on the DXY, on Monday, the price grabbed the liquidity with this engulfing candle during Asia session. I don't trade this kind of setup because it is the first candle of the week. So the first or second candle of the week and of the day. You can just wait for the price to come back with this good setup like this here and then sell from here. And what I'm looking for the Canadian dollar, I will wait for the news to be released and then I will decide based on the structure. The price might take the liquidity from previous week low and then push inside the range. Or it might push in the range during the Asia session, and during New York session will grab this liquidity and then push lower again. We need to see how the market will perform. I'm expecting weaker Canadian dollar means that it will be a stronger dollar. So this will be because we are trading the US dollar against the Canadian dollar. So the dollar will be stronger against the Canadian dollar. Let's have a look on the Aussie. So on the Aussie dollar, again, I start with the weekly chart. On the weekly chart, this was also a doji. The price continue, took some sort of liquidity below and then push higher, took the previous week high. So again, I will adjust like this. Always keep it simple and then we will see how the market will perform. I put this line because this was the last low and the price took the low 2 weeks ago. So I'm expecting for the Aussie dollar is to continue moving higher, but because of the DXY, it's not supporting this move. So we will have to wait and see for a clear structure and narrative before taking any trade. Last week, this is what happened last week. Oh, I already adjusted. This is what happened last week. As a start of, this is what I mean. I don't like to start trading Monday. On Monday, took the liquidity, pushed a little bit higher, and then came lower, took all these buy stops, and then it continued with this perfect scenario. After that, it gave us a good opportunity with a small candle, which means a small stop loss before it continue moving higher. And let's have a final look on the gold to see if we can see any trade. So, but before going, this is another opportunity. So this is a reversal candle and engulfing candle. It continue moving lower. Let's see if the price can come to this fair value gap before pushing higher, or if we will have another kind of structure and then it will push lower. And always trade after the news for a clear bias. So looking at the XAU USD, which is gold pair, the weekly chart for gold look bearish. So the entire trend is bearish. Do you think that the price will leave this liquidity and push higher? This is what I don't think so, because this is very good more than 100 pip for a liquidity to be grabbed as well. And I will show you now what happened for this week. So this week, the price pushed lower. It rebalanced this week before it continued, and then it took the liquidity below the low, and immediately on Friday, it pushed higher. Because there are so many sell-off once the liquidity is being taken, so many sell-off. So I'm expecting that the trend might continue, but we need to have a clear structure before taking it lower again. So I'm expecting this. So if I adjust the lines like this, previous week low and previous week high. I'm expecting the gold to come to at least 50% of this candle. So if we can look at it this way, we look at it this way, I'm expecting that the gold might come to 40 50, 40 60, and then it will continue moving lower. So I'm expecting something like this, and then lower, taking the liquidity of this candle low, which is November 2025, and taking the October 2025 before it continue moving higher. So my bias is still moving lower with the gold, but irrespective, we should not place any trade because of anyone bias, even me. So you can take the trade when you have a clear structure and narrative. And I will show you my trade for this week. So going to 4-hourly chart, as the start of the week, I bought here in this candle. I did not see this one. So I bought here on Wednesday and I closed it as soon as it came and grabbed this liquidity again, and it gave me another confirmation. Then I sold from here to here, and then the price on Friday took all these liquidity, which was a strong liquidity grab before moving higher. I'm expecting this, what I'm expecting on gold, because as I said, it will come and take the liquidity from here 40 50 before moving lower. So it might continue moving like this, take the liquidity and then move lower. But let's see, because central banks all over the world are also buying gold. We have to be very careful when we are selecting our trade. We need to be very diligent and very cautious when placing trades, and never place a trade without stop loss. And that's it for me, and we'll see you next week, and wish you a happy trading and very profitable trading week. Take care and goodbye.